Deven Choksey too joins in on the show. Deven, hi, afternoon. What's the strategy for investors looking at both medium as well as the long haul?
Good afternoon, Aisha. Obviously, I think this market is offering plenty of opportunities during the correction. And I firmly believe that I think given the kind of correction that one is experiencing in individual stocks vis-a-vis across the market corrections, I would think that I think it becomes an opportunity to buy into some of the qualified names, good names. Largely because of the fact that I think on one side you have a situation wherein plenty of new IPOs are coming into the market. And as a result of which, the traders they keep on shuffling their portfolio stocks from one to another, also to go for the IPO subscriptions. In such situation, when they exit some of the quality names, which becomes attractive enough to buy into the portfolio under the corrected price, it becomes an opportunity to invest for the long-term investors. And that's what I think we would like to take the opportunity as, because we firmly believe that some of the larger companies which are available at compelling valuations today, they become an opportunity for tomorrow for the portfolio investors. And that's where I think your eyes and focus should be in investing into the market.
Okay, that's a take coming in. We'll watch out for this in the market as well. But for the time being, Prism Johnson continues to do quite well. Actually, 19% surge on that one. Sumitomo Chemicals up 11%. Wanted your take regarding the autos as well, Deven, because we have seen a slew of these discounts and price cuts being announced. Yesterday, it was the ICE vehicles wherein Tata Motors announced, discounts up to 2 lakh rupees. Today on EVs as well and hot selling cars like Nexon, etc. as well, they've announced discounts at as much as 3 lakh rupees. Does this go ahead and tell you that there is some problem and either inventory, either plateau in demand, but there is definitely something amiss in the retail demand of autos?
Yeah, Nisha, good afternoon. Well, I believe that I think it's a reality that on one side, the inventory in the backyards definitely requires to be cleared. And that's what most of the OEMs are doing currently. Ahead of festive season, probably I think there is a requirement to clear this particular inventory. And that's where these discounts are coming in. I do agree that I think with these discounts, at least I think some amount of challenge would be there in the near-term earnings of the company. But having said that, I would think that the long-term prospects of the business in the activity of the company like Tata Motors, they are not getting affected. On one side, they have got a proper portfolio balance, which consists of the commercial vehicle segment on one side, the passenger vehicle segment on the other side, EV segment as a subsidiary. All of these, I think, are a right mix as far as the product portfolio composition goes. So, in a given situation, when they are desperate to clear their inventory, it should be seen as an attempt to, I think, not run into any kind of a negative books. And that's where probably I would think that market is probably responding and the stock price is down. If a correction is of a sizable nature in the stock price, probably I think that can be a buy opportunity because long-term prospects in the business they remain intact, and we believe that the commercial vehicle is a segment which one should be owning eventually.
Okay, since we're talking about autos, here are the conversations my colleague Sumit had at the event in Delhi.
We expect that I think H2 and maybe starting from September, which is the beginning of the festive season, the demand should start picking up again. And we will be in a good position with growth YOY in H2, which should lead to the final year at around flat with respect to the last year.
So talking about now, going forward, what is the outlook overall? New launches you're bringing, what category of tonnage you will be getting the new vehicles in?
I think we continue to launch products and variants across the range, and generally in a year we launch more than 150 variants. So I think we will keep the same trajectory in terms of number of launches this year also. But within that, I think we have now also been introducing electric vehicles, and we have also been introducing alternate fuel vehicles, that is CNG and LNG. So I think we have been introducing spate of technologies across, and we'll continue to launch quite a few products.
And talking about the prices, so on as far as vehicles are concerned, are you feeling any price pressure of inputs? If yes, what is the outlook for prices as far as commercial vehicles are concerned?
So I think the pricing for commercial vehicles in this year has remained stable. There is also good pricing discipline in the market. As far as input pressure is concerned, I think there are some commodities which are inching up, some commodities which are correcting. So on a net basis for commercial vehicles, I think one is seeing a flat kind of commodity outlook.
Well, that's the word coming in from Tata Motors. In the meantime, let's just also take a look at how these auto stocks have actually performed. M&M continues to be, a bit of a struggle. 2,700 is where that stock is. Naresh, just want to, get you in on the charts of both Tata Motors as well as M&M, because the cool off from the year high for M&M has been quite significant.
These names have seen a 8-10% correction from the top and a consolidation. And mind you, over the last 1 year, say roughly around last year, the stock was closer to 1,600, went to 3,000, and now is at 2,700, 2,800. So looks like a consolidation, a time-wise correction on Mahindra and Mahindra. Same is the case with Tata Motors. The stock had gone up almost more than 100% over the last 1 year and is now taking a pause. A couple of spikes around to 1120, 1150 did not sustain. So I would expect it to stay sideways for maybe another 1 to 3 months. So a consolidation across the whole auto space, if you see.
That's the latest in some of these auto companies. In the meantime, the SIP data also came out, and the SIP flows continues to be strong at 23,547. It's an uptick versus what we saw last month, even though on a month-on-month basis, there has been a reduction in the net inflow as far as the overall equity inflow is concerned, but at least the SIP flow continues to be quite strong. Deven, what do you make of this? And the other big news and the important news was that there's money flowing into large caps now.
Yes, absolutely. I think in the large cap, there is a value proposition. On one side, most of these companies are decently valued, thankfully to the active derivative market, which is basically making the price realization, I think, much simpler, or the value realization much simpler by giving the correct market price practice. On the other side, I think you are seeing these companies not so expensively traded, and at the same time, fund managers finding more comfort in buying the neglected valuations in some of the large cap companies, be it part of Nifty 50 or Nifty 100 for that matter. I believe that I think that's reality. The retail investor is putting in money into the mutual fund. It's continuous process. Today, I think 19.5 crore accounts, unique client code accounts, are already there registered in the exchange, which to my mind, I think is only a beginning. It could be 3 times more than what we have seen up till now. Largely because of the fact that I think with the size of the economy growing, higher amount of saving and investments is becoming the reality. And today, if $400 billion are getting deployed into the financial assets, be it equity, direct equity, mutual fund, insurance, or provident fund, etc., I think 10 years from now, I think you're likely to see 4x kind of a growth, 4 times kind of a growth in these financial assets, I think, which are coming in thankfully to the larger amount of GDP and the contribution of financial assets into it. So yes, I think we are likely to see larger amount of inflow into mutual fund in a successive period as well. So we remain distinctly positive about the liquidity-driven push that the market is getting and will continue to get eventually.
From Mahindra Manulife's Anthony Heredia is also that, he's saying that it wouldn't be surprising if SIP inflows surpass the 30,000 crore rupee mark by the end of the financial year.
My prognosis for SIPs longer term continues to be positive. My view is SIP numbers will grow at 1.5 times the growth of the overall industry in equity and hybrid. So I wouldn't be surprised if we start to see 30,000 crores per month by the time this financial year is over, because there's a very strong appetite from retail investors towards this product. And secondly, I think given where market valuations are, a lot of people are looking at SIP as a more sensible route of investing in any case.
Okay, point taken. So that's about the SIP flows. But Deven, what's the view on power sector? Today, Tata Power is active 7% higher. SJVN is up 5%. Suzlon Energy is doing quite well in the trading session, 5% higher. Take a look at CESC. That stock has been, up 5% as well. A lot of these power names have come back, especially today. Would you be buying afresh in some of these names?
So maybe I think individual news flows in respective companies, be it for Suzlon, which has won, I think, one of the largest orders I think, up till now for execution purpose. So visibility on the execution side is much better. And so is the pricing format, I think, which is much, much stable now for all the renewable segment of industry in the power. As far as the conventional, the thermal energy business is concerned, I guess I think the larger amount of benefit is because of the cheaper input cost, which is now basically becoming a reality. On one side, the crude oil prices are down and suggesting the trend will continue to remain down. On the other side, I think all other alternative fuels, which are basically were till now priced higher, their prices also have started coming down. So certainly on the demand side of the scenario for electricity, which continues to remain robust and going forward as well. So you are likely to see the better margin format, I think, for most of the companies hereafter. One should remain positive, though I think that somewhere down the line the commodity play will be evened out. But at the same time, I think the higher demand for the energy is definitely going to be the reality for even not 1 or 2 years, but I think next 5 to 25 years. So certainly we remain distinctly positive in this territory, and selective businesses within the entire ecosystem, they remain favorite picks, I think, as far as the investment activity goes, be it in the finance space for the power generation activity or for that matter transmission activity, or be it in the space where engineering companies are involved. I think we look at several companies within this value chain for putting our money into this investment because the upbeat scenario remains intact as far as the power business is concerned.
Okay, point taken. But since we are talking about the power sector, hear out what Mr. Girish Tanti, the Vice Chairman at Suzlon Energy, had to say. And then we'll also play the soundbite of a very important conversation, Mr. N. Chandra talking about the prospects for Tata Power.
On an average, I think as we have kind of been on the historical reasons, both on the revenue side as well as margin side, we will remain broadly in line with our past performance. So we are seeing a good flow of orders from the industrial groups. And I think with the PSU coming in this way, now we have one more leg of growth from the size and scale on that ground. So I think from the demand point of view, I think it's a very robust demand that we are seeing in the industry.
The sustainability is a big theme world over. And it is a reality that the world has to change. We cannot be emitting so much carbon.
CO2 is public enemy number one.
Number one. And that I had the conviction. Second thing for me is if we have to do anything in India, electric vehicles should get the priority because we have the maximum number of polluted cities in the world. 14 out of 20 are in India. So if we have to really solve this problem, in all our companies we have to pivot. So I had this belief not only in Tata Motors but also in Tata Power. Same time we pivoted to electric vehicles here, we also took a decision in Tata Power that we will not put capex in coal. All our capex will go in renewables.
Right.
I still have the conviction that electric vehicles is the way to go. It is the destination.
To be at the cutting edge of technology, especially in this space. I mean, India, honestly, is still quite far behind.
We will get there.
How long do you think it will take?
I don't want to put a timeline, but
Right.
we're getting there. Every single investment that we make gets us closer.
So we are catching up.
We're catching up. And we'll
Right.
catch up.
Mr. Chandrasekharan, I want to talk on the...
But you should never assume that any country is going to be completely self-sufficient and in 100% in everything.
Right. No, we are
You
too
will
connected
always
about
work with different sources, but you need to create enough redundancy so that the resiliency is not impacted.
Okay, EV is the way to go and the vision is pretty much out there. Tata Com holding up 4.25%. Tata Power higher by about 6%. There's TCS up a good 1.5%. Actually, most of the Tata Group stocks are doing pretty well. Tata Motors also will just come up for you on your screens. That perhaps is the only laggard, down about 0.6% as we speak right now. What's the Bank Nifty up to? That continues to lag. Naresh, just wanted your sense on the Nifty Bank and whether you see any meaningful comeback or a move.
So in terms of the index, we've seen good follow-up in the last two sessions. And now what we need is a clear cross above 51,750, 51,800 on Bank Nifty spot levels. If that happens, that gives a clear signal of reversal and we may even go back to the previous highs. But as of now, it's too early to call given that every time it has taken a move, we faltered. We have yet not seen the heavyweights like HDFC Bank or a Kotak Bank do well. You have strength in ICICI Bank and the smaller names as such. So waiting out, but overall, the banks have consolidated long enough. At some point of time, there could be a recovery in a major way. So for now, watching out for price action to confirm 50,500 on the downside, 51,800 on the upside would be the deciders going forward.
So that's the latest coming in on some of these counters and what you should watch out for. But in the meantime, just taking stock of what else is happening in the markets right now. On the gaining side, there is a bit of a move on the likes of First Source, Himadri Speciality, TVS Supply Chain. Piramal Pharma, of course, is reacting to that news of the Biosecure Act as well. Deven, what's your take on pharma and how big a potential could this be? Because, of course, while it sounds positive, it's the first step towards getting that, act cleared. But then there are those rhetorics as well that maybe this is just related to the election and the political rhetoric, and maybe 1 year out things will be back to normal. What's your take on what kind of export potential does the India pharma business have?
So let us look at it from two angles. On one side, the input cost is softening as far as I think the intake is concerned for pharma companies. So that is where probably I think they are likely to get benefited in subsequent quarters. But keep that aside for a while. I think look at the companies which are either in the business of providing the specialty generics, the complex generics as we call them as, or the companies which are in the business of API and CDMO. I guess I think these companies are relatively better placed in the universe at this point of time. And depending on the product to product category, I think that I think some of the top tier companies like the Sun, Cipla, Lupin, Dr. Reddy, I think they relatively look more stable at this point of time compared to their peers, I think in the mid tiers. So because of I think their ability to supply to the complex generics products, and at the same time, some of them I think in the API category like the DVs and the Laurels. I believe that I think these are some of the companies where probably you are likely to see relatively better growth than what you have seen in the previous years, and certainly with the better profitability in coming quarters and the year ahead as far as they are concerned.
Right, okay, that's the take on pharma. Let's also get in some BTST ideas going on that note. Kunal, what's on your list?
So I'll go with two buy calls. The first one is on Indian hotels after this breakout move above 675, 680 mark. Would look out for targets in the range of 720. Stop loss could be kept at 680. And from the FMCG pack, Tata Consumers is something which is making a comeback. The stock is completing a bullish flag formation, so would suggest a buy. 1275 as a target. Stop loss at 1175.
Okay, and Naresh, what's your BTST list like?
So first is a buy on RBL Bank, which is bouncing back from the support band of 210 to 15. Stop loss at 212, target price of 220. Second is a buy on Jubilant Foodworks. The stock has given a breakout into new 52-week highs. Stop loss at 660, target price of 680.
Those are some of the top recommendations coming in. Deven, I want to pick your brains regarding how the capex cycle is turning out to be. But before that, here are a slice of the conversation we had with Mr. Vinayak Chatterjee earlier. He was of the view that there is definitely capex which is picking up, but interestingly, it's happening in the non-traditional sectors like semiconductors, solar, green energy, healthcare, data center, etc., and not the usuals like cement, steel, etc.
Thermal, renewable, transmission, distribution with smart meters, pump storage, airports, Jewar, Navi Mumbai. These are all happening sectors. In social infra, if you see healthcare, real estate, and now the announcement of new industrial cities. If you see some marquee announcements, there have been the announcements on chips, on mobile manufacture, on batteries with Ambani's. On digital, there is a boom in data centers. And as I said, there's massive investments happening, announced on chips, mobiles, electronics, batteries, etc. So it is happening. Now the question is it happening with the levels that government expects? No, it is still the state that is doing the heavy lifting in infrastructure. And there is an added expectation that private sector will rise with even more investments in the manufacturing sector. But as I said, there is a fairly robust investment pipeline happening. And let me also tell you that there is a imminent pipeline, and what I call the imminent pipeline is very mega investments in ports.
Okay, that's the take coming in on capex right now. But Deven, just wanted your own sense on the capex theme. A long haul story it may be, but you think that the best could be right now, perhaps behind us, when it comes to capex, because it's a well discovered story, and the stocks as well have seen a fair amount of run up.
Maybe I would like to think, after looking at the various programs which the Reliance is conducting, Tata are conducting, or the Adanis are conducting on the building of the infrastructure side. In Adani's case, I think is a whole bouquet of infrastructure, starting from airports to roads to railways to ports, power and transmission included, along with the renewable segment, and I think the entire value chain of renewable segment. And so is the case with the Reliance, wherein I think they're covering the entire renewable space, I think, as a value chain. I believe that I think this particular capex program is only a beginning of the era which we are right now talking about. Maybe in the first few years, I think you are going to be seeing a lumpy investment, and in subsequent period of time, I think you are likely to see the ancillary investment taking place going forward. So certainly the capex program is going to be robust, and that's what is more exciting, because when this kind of capex program is undertaken for the newer age sector that we are talking about, along with this capex program, also requirement is of the conventional commodities, and particularly the metal commodities or the cement commodities for that matter, or even I think the required segment of the optic fiber or the power cables, they all would come into demand going forward as well. So yes, on one side you are seeing the new age investment taking place. On the other side, I think the industry is supporting the new age investment, I think, with a higher amount of supply to some of the infrastructure play that we are talking about. One remains confident about the possibilities going forward, and it also gives you the clarity that in next few years we are likely to see the sustained growth of around 15 to 20% in the earnings of the companies at the same time. So that's where probably I think one can keep an eye on some of the larger companies with the bigger capacities that they have. They would be in a better position to reap the benefit out of this the expansion program which is happening in the economy.
Point taken. So that's the view on some of these capex players. Before we wrap up for the day, just taking stock of the big large caps and how they are faring in the trading session today. NBFC is clearly on the back foot, and insurance too. Deven, do you believe it's that insurance have perhaps now peaked out, or at least going out of flavor now? And for NBFCs, ideally a rate cut scenario is a positive time. What then explains the downtick on some of these names?
I think it's a brilliant opportunity to buy in the market, because frankly, this market is giving you this opportunity at a valuation which is not so expensive. On one side, there is a possibility of bringing down the rate of interest. On the other side, there is an uptick in the demand for credits, be it retail credit, be it corporate credit through SME, MSME as well. So from a perspective of looking at the banking space and the retail NBFC space as a whole, I believe that I think the larger the size, better will be the opportunity for many of these companies. And that's where I think you're getting the opportunity to invest into them. Many of these companies are currently quoting at 2.5 times, or even below 2 times in some cases like SBI, as far as their price to book value is concerned. And that's where probably I think you get an opportunity to buy into. Insurance, in particular, life insurance segment, I believe that the companies who have already spent 15, 20 years in the business, they are probably are in much better position now to attract the newer premium, the new business premium, and at the same time, I think manage their costs well because of the larger amount of infrastructure already in place. So I would think that insurance per se would find more inclusion in the portfolio of most of the fund managers, because I think that's an underweight up till now. So certainly, I think there is going to be a catch-up game going on to increase the weight in the portfolio from the insurance space. So we remain otherwise very positive about the entire prospects going forward for insurance companies. And fortunately, the valuation wise, they have moderated, they have not increased. So at the same time, it is an opportunity.
Place NBFC's correction is a buying opportunity and insurance is a long-term theme. But Deven, have you looked at the Bajaj Housing IPO and what would be your recommendation? Subscribe or avoid?
No, it should be subscribed clearly because I think it's a pure focus housing finance company with multiple legs across the value chain within the housing space, be it affordable housing, be it prime housing, be it loan against property, or be it developers finance, or even the rental discounting. I think this company has a complete portfolio in place. And what I like most about them is that I think having created complete portfolio, they are ensuring that they can keep on growing the books at the rate of 30% rate of CAGR growth. So that means every 2.5 years, 3 years, I think you're doubling the size of the balance sheet, which is fundamentally very positive. So if one is planning for next 5 to 10 years of investment into such kind of businesses, one is expected to get significantly large amount of capital growth in the portfolio. Clearly, it's a buy opportunity from investment perspective.
Okay, Deven, great to have you on the show. Kunal, Naresh, we'll let you go on that note as well.
If you like this video, then like, share and subscribe to ET Now.